We found an unusual trade worth $12.1 million on Symbotic stock, ticker symbol SYM. And what's also very unusual about this is that Symbotic reports earnings next week on February 5th. And so in this video, we will analyze this unusual option activity to find out how this wealthy investor is trading Symbotic before earnings. Is it bullish and buying or bearish and selling, so that we can also trade in the same direction to make money while the rich are getting richer on Wall Street? Because as we all know, the rich have more access to information, including leaked insider information, such as earnings reports, to make better financial decisions. No wonder the rich get richer. And so without further ado, let's dive into our analysis and our trade. Now, as you can see here on the options time and sales tape, these unusual options were being traded for the March 21st options at the 30 strike puts and the 30 strike calls. Notice the price that was being paid, $3.45, and that is exactly the trade that we also entered. You can see here for our March 21st options at the 30 strike calls, our position here, POS stands for position, green means buy, where we also bought these for $3.45 each. And when we analyze this trade, you can see here on the risk profile profit loss graph, where the x-axis is the share price of the stock, where it is currently trading over here at about $30 a share, and the y-axis is the profit loss. And so as the share price goes up, it becomes more positive profitable. If it goes down, it becomes more negative loss, because this is a long bullish trade. And you can see here on the Greeks, we have a positive delta trade. If it was a short bearish trade, it would be a negative delta. But keep in mind, this is a higher risk trade because we do have earnings coming up. And so if you want lower risk, higher probability of profit trades, then make sure to go to our website. We'll put a link at the top here where you can gain access to better trade ideas, including option strategies or stop losses if you only trade stocks to reduce risk while increasing the chance of profit. Now, why did we trade these call options for only $345 each? Well, because if we followed those unusual trades, they would cost a lot more, because you can see here that there was actually 4,000 put options that were being traded, and these were clearly opening trades since the open interest is much less. Same on the call side here as well. And so we know both of these options were opening trades. And what this wealthy investor was doing was selling these 30 strike puts to open and buying the 30 strike calls, using the premium that they collected from selling those put options to buy call options as a long synthetic strategy. You can see here that this trade is also a bullish long trade. And when we take a look at the Greeks, you can see that the delta is very close to 100, which is why it's called a long synthetic, a stock replacement strategy, because if they bought 100 shares of stock, it would also be 100 delta. And so if we calculate the total trade cost based on how many contracts they sold, we can see here that these put options, there were 2,500 being traded here at 1:46 p.m. at the 12-second mark. And then just a few seconds later, at the 50-second mark, they traded these 30 strike puts again, 1,560. And so if we add these up, 2,500 plus 1,560, we get a total of 4,060 contracts where they sold these puts at the 30 strike, which means they are willing to own 100 shares at the $30 share price. And so when we multiply 30 times 100 shares, that means that each of these put options that were sold required $3,000 of buying power. And since they sold 4,060 contracts, we multiply that out and we get a total of $12.1 million. So quite a significant trade to be placing before earnings next week. But keep in mind, anything can still happen for earnings. And that is why this is still a higher risk trade in comparison to the trades that we share on our website. If you want the lower risk, higher chance of profit trades, then make sure to go to our website where you can get more of these types of trades based on stronger data analysis. Because not all of these trades will be profitable, some will be a loss. But as long as we diversify our portfolio with the trades of the rich, then we can become more profitable in the long term. Let us know in the comments below. Do you think Symbotic stock will rally after earnings, or will it crash down? As usual, please hit the like button, subscribe if you haven't, take care, and have a wonderful day.